All right, everyone. Well, good afternoon. My name is Oscar Joffrey, and welcome once again to our wonderful KoreSummit webinar series 2021. Today, we have an exciting topic. This is a great one because this is a collision. Yes, a collision discussion, bringing a very interesting industry and with a new way of delivering that industry. So before we get into the topic at hand today, obviously we have our great panelists with us. I want to, if they could take a moment, please. Elliot.
Hey, Oscar. Hey, Dr. Karan. Elliot Chun here. Part of emergence at Wield & Co. We are a emerging technology and digital asset team under the Wield & Co. banner. Wield & Co. was founded by David Wield, who, among many things, a lot of his efforts have laid the foundation for the Jobs Act, so Reg CF and RegA Plus. And happy to be here to talk about, and I like that term, collision, Oscar. That's a new one. It's truly a collision.
It really is. I think there are two things coming together, and now we're going to have a good discussion on this. And of course, our next guest, the one and only, Dr. Karan Garimella, please.
Thank you, Oscar. I hope the one and only. Thank you so much. Hi, Elliot. Good to see you on the call seminar today, the KoreSummit. Love to chat. You know, I like the collision analogy, but I don't know. I probably prefer the volcano analogy, volcano erupts, but it creates new ground, very fertile soil, right? Volcanic ash. So, well, let's see where we can take that analogy. I'm the chief scientist and CTO for KoreConics, and I've been in this business of fintech and blockchain for many, many years, and very exciting times.
Perfect. Well, thank you both. I mean, we are good. You know, I didn't want to just dive into digital securities because I was thinking about this, how we could bring this together. And I think this is really important, that why we added Elliot to it, because this is part of the collision that people thought that the whole idea of digitization or tokenization was to remove the intermediary. And in fact, it's quite the opposite. It's embedding the intermediary role into it to make sure that whatever it is you're doing is going to be fully compliant. And this is going to be, so I want to make sure I give a scope to everyone. This is a compliant discussion. This is not a discussion of what, you know, without intermediaries. This is all about intermediaries and how to utilize this great technology and bringing these two worlds together, meaning a technologist with a registered individual, and how they need to work together to deliver something to us so it can represent what we mean it to do in a fully compliant manner. So that's what this discussion is going to be. That's why it's titled Digital Securities Tokenization. So before I get started with that, I want to really go on top and ask the question, we're using these two words not interchangeably, but we've made a definition of it. But I'm really curious to hear yours, Elliot, on the difference between digital securities and tokenization for the audience.
So, well, first, one comment on your just comment now is the thought that it may remove intermediaries. And I will say that my view of both tokenization and digital securities is it's a more efficient way of operating something that has been tried and proven in our current capital market structure, right? And so I don't believe any point in time in the near future that we're going to remove certain functions that are required in the capital markets process. My hope is that this new functionality will allow for more efficiencies and those benefits being returned to both the investor as well as the issuer. So lining that up, what is the definition of tokenization versus digital securities? I don't even know if there is like an official, there certainly isn't a Webster's definition of tokenization.
No, we're going to do it right here. Today we're going to provide it.
It is changing constantly, right? But I think it's the combination of the two words. I think it's digitization of capital markets. Why? The problem with tokenization is I think it gets misconstrued with what the tokens represent. Right. The reason why we like to use the word digital securities or digital assets even broader is because the digitization of what that thing represents is an actual, in this case, it's a security. It is a registered investment vehicle. And that's important to distinguish between tokenization, which in the earlier forms, and call it 2015, 2016, 2017, could have been any digital representation of something that facilitated a particular ecosystem, right? So I'm thinking utility tokens. So when those kind of came to market, that term tokenization is when it started getting quote unquote coined. And I think it's brought along a not the best indications of the strength, the compliance, the regulation, the legal, all the things that are required to go in to really support a quote unquote digital security. So we like digital securities, we like digital assets because we think it appropriately communicates the level of time, effort, and most important, security for investors that are using this as a method towards investing into particular issues.
You should really become a politician. That was really well said. Because I would have been more blunt. And, I am. So I will. My view, I'm not a broker dealer, so I look at it merely from the eyes of the investors, because I think we also need to couple that. I think what you said is correct. I think digital securities does grasp everything that is required. It's not trying to remove the intermediaries, the broker dealers or anybody involved. In fact, is working with them to be part of the solution, not to extract them and make that component. But I think overall, tokenization, the reason we put it in the subject matter is so people could become aware of it. What's the sentiment within investors? And that, I think that's even a bigger element into answering the question is the sentiment towards this particular term is been, depending who you speak with, they've actually been, they've lost, they've been hurt by it. Digital security, digital assets, everybody knows it's kind of grown up. There's real players in the game. There's the Goldman Sachs, the Will & Co's, the big names are associated. They are embracing it because it encompasses everyone. So I like your definition, though. It's very, very nice, well articulated, well prepared.
Thank you.
Would you not say? All right, so we've hashed that over. So now the real key is, obviously, we're embracing this new digital asset world with digital securities. We have this amazing regulation that is now going to go live in the 15th of March to be increased from 50 to 75 million, which we all know now is going to open a whole brand new asset class into the sector. And it's going to transform things dramatically. And so I'm going to ask each of you this question, that based on what we just mentioned, the definition of the two, where do you see the impact digital securities having in this particular regulation? So I'll start with you, Ellie, and then I'll go to you, Karan.
So I am very excited about what the potential impact is of digital securities, particularly to Reg A. I mean, we're talking transformative stuff where it matters. And if you look at the history of capital markets and where we are today, it took us 100 years plus to get to the 2021 version of the stock market, which is, and I'll use that as the closest comparison to an existing security today that people understand. Also, stocks are publicly traded. And so the access to be able to own equities is something that normal people, everyday people, can understand and can grasp. What they don't currently understand and grasp is that the existing infrastructure that is built that supports public equities and investing in them is very old. It's antiquated. It was built because we didn't have the technological tools that we do today in 2021. So it's fascinating that with this collision of Reg A plus with digital securities, that we are now allowing a 2021 infrastructure for investing into these new securities using 2021 tools is going to pave the way, in my opinion, for a more efficient, a more fair, and a more accessible capital market to both investors and issuers, and done in a regulatory compliant form. Now, the one challenge is that it's still new. We're still so early into this. People, generally speaking, do not know what a digital security is. They do not know what tokenization is. And Bitcoin has helped some of that, but we're still very much in an awareness phase. We're not even in close to the education or the training and implementation phase. So while the exciting parts are that the infrastructure, I believe, is there today, I don't know if we can say the same thing about adoption, which is why events like this are vital to the rollout of this collision between Reg A plus and digital securities.
And you are on the ball, and it's only Tuesday. I'm really impressed. It must be that San Francisco weather you're getting. No, this is great. No, I didn't expect that, but I'm going to come back. I got a couple of questions out of that. So now I'm going to ask a technologist, because so when Karan and I first met, you know what it's like when you talk to a technologist. It's one thing, they get all excited about that shiny light, and Karan was no different than anyone else, but we did understood that in order to create this digital securities, they need to be different. But like anything else, until you're deep in, you don't appreciate it. So you're now deep into Reg A. Not only deep in, you're actually alongside broker dealers, clients. You're seeing it from all sides. How do you see digital securities having an impact on Reg A as we move forward with adoption?
All right. As a technologist, you are quite right. But I've seen so many bright lights and shiny objects, and I just hypnotized by these things all the time, right? So, but having been seduced by all these bright lights and shiny objects, over the years, at heart, I'm really a business guy. I'm a fintech guy. I come from the large enterprise system, and supporting entrepreneurs. And there are many things that I see started off as major problems in this industry with the concept of tokens. And as Elliot was pointing out, that's a very broad term. It's like saying, let's go to the zoo, right? We've got so many different types of animals within the zoo. Some are really dangerous, some are very nice. So we have to understand what we are actually dealing with. So if I go back and take a look at the journey, back in the 2016s and 2017s, tokenization stood for willy-nilly will tokenize everything. Coins and utility tokens and assets and securities and all kind of came into one bucket. It's like putting the sheep and the tiger and the lion all in one compound and assuming that there'll be no blood and chaos, right? But we know that's never going to happen. So what we're seeing now is, at least among the more responsible parts of our, the capital markets ecosystem, is people are recognizing that this has to be a much more responsible, well thought out way of architecting this entire thing. It just cannot be about, let's get rid of the lawyers or let's get rid of the regulators. It is not about disintermediation. It's about intermediation, but with the right efficiency and the right focus. What does all this mean? It basically means that with the new digital securities and as we are seeing in the RegA space, but that's not the only thing. There's many other regulations may come in the future. What we have to be doing with the digital securities, all of us, is capture their leverage, their ability to handle new forms of innovation, all kinds of innovation happening in regulation limits, new forms of constraints on how regulation can actually work, how investors and broker dealers can work effectively and efficiently under various types of regulation, all the constraints and rules that they capture, new instruments that not only the regulators but the broker dealers and the issuers can come up with, and of course, how do you deal with all the variety of agreements we are seeing? As you know, Oscar and Elliot, there are so many different types of agreements that can happen in this space, from Reg D to Reg A to Reg CF and so on. And how do we encapsulate them in such a nice way so that we can efficiently deal with them? We don't have to go back to paper. A lot of the issues that we see today in the public markets, on one side, they're very efficient, fast execution, high volume trading, we got that. But in many other administrative matters, what happens in the T+3 after all that is it's a nightmare of all kinds of paperwork and linkages and siloed applications, and we are seeing a lot of that happen now, even with all the traditional entities in the public market space as well. You take all that and you magnify that by 100. That's what we're facing in the private capital markets, and that's what digital securities can help solve.
Very interesting. So, and one of the things that normally you go through technology. People are wondering, why isn't he asking about smart contracts? Because I think one of the things that I want to unravel here from both your perspective is that we have this great regulation. We talk about adoption, and then you need to be knee deep in to actually see it. What are all the things that are taking place? So I'm going to bring this now to this term that is often associated with tokenization. Interesting enough, with tokenization, and then people at times don't think that happens in digital securities. So Elliot, I'm going to go to you. So I'm going to bring all this back here a little bit because he just explained all the elements that he's knee deep in, right? So now we're going to talk about smart contracts in the context of both tokenization and digital securities. Back again to you.
Well, I mean, the thing I appreciate about technologists that understand the business side is that they're not that they're rare, but it's a lot more difficult than most appreciate to be able to understand the step-by-step processes that happen in any security transaction, and then to be able to present a method and an elegant solution that is able to facilitate that process. And that's what essentially the smart contract is in the digital security or tokenization side. You are embedding a relatively complex process, especially when you think about each step that it actually takes. And just because we have technology that has innovated that step, generally speaking, that step still needs to occur in some way, shape, or form. And what's the consequence of that step not occurring? It could be very bad. It could be a significant risk from a capital perspective, a loss. It could be a mismovement of capital. It could be an incorrect investor that's not qualified investing into something. There are a significant number of risks that actually it's not significant. Every single step is open to a mistake when you translate a complicated process like buying and selling or owning any security and try to put it into a more elegant and efficient wrapper, like a digital security that has the rules embedded in it through smart contracts, right? And so it's tough. And because of that level of complexity, because of the number of different parties, and we use the word intermediaries, but I want to move away from that, because it's not like an intermediary is almost like, I need to do this, and you are in the way between me and two end-to-end users. It's more facilitators, because these functions and processes must happen, but they must be facilitated in a way that is efficient and cost effective. And look, things are always, for the rest of humanity, there's always going to be mistakes. You need facilitators to be able to step in with the market knowledge to be able to understand what happened and then how to fix that. So smart contracts are great. Maybe, although that definition needs to change, right? Because they're neither smart nor they're contracts. But it's important to understand that the amount of information that is going into the coding of a digital security to make sure that it is operating as expected, it's immense. And so, while we're sitting here at this time saying, yeah, this is great, we can get digital securities in a Reg A plus format, and we can be buying and selling these things, this process is going to continue to evolve. It's going to get better. There's going to be some mistakes along the way, but not anything. There are mistakes that are happening now with people either settling bad securities or wiring money where it shouldn't have been wired. These are processes that we've had for hundreds of years. So expect some of these little bumps to happen from a digital security side. But if you were to give us 5 years, I think there's going to be a very strong case for why a digital security wrapper is a far superior way for execution, administering, maintenance, transferring, all the processes that happen in a securities transaction. It's more elegant and it's more efficient in a digital security wrapper.
Perfect. So I wrote down some notes. I'll wait till the end a little bit to give you an update on digital securities from our end. But Karan, obviously smart contracts, right? So there's a complexity to this. In the early days, it was simplified. We now heard from Elliot that it's not so much about the intermediaries. It's about the complexities of legals and facilitating the processes that things need to be followed. That if you do skip it, to his point, if this money is done first before that, the whole deal gets unraveled. Where people go, what's the difference? Well, the difference is the process. Please.
If we keep in mind, and we all should, what Elliot said about the wrapper and the complexities around any digital securities transaction, forget if it's digital or not, it's a securities transaction. If you keep that big vision of all the things that are important for that, so compare that with the generally popular notion of a smart contract as it exists in sort of the public domain today, right? From that perspective, the current or the existing view of people in the public domain about what a smart contract is, there are 2 things we should know about that one. Number 1, they're not smart. Number 2, they're not contracts. So we think they're smart contracts. In fact, the phrase smart contracts was a misnomer, and it originally came about through some flight of fancy, as they themselves admitted that. And they said, we should have actually called it a stored procedure. So they have admitted that it isn't really, it's like a stored procedure in a database. That's what it really does, right? But to be fair, when you look at the way we think about in this ecosystem, we're looking at digital securities in the capitals, right? Securities are a very different instrument. They're not like cryptocurrencies. They're not like tokens. They're not like other digital assets. Securities are subject to securities laws. There are three major areas where I think people need to understand what it requires to keep smart contracts fully functional and effective in the securities world. So number one, not all securities are the same. Not all securities in the same country are the same, right? You've got different types of securities, and how do you deal with all of those? And what are the various restrictions, the rules, the regulations around it? They're all very different, right? What you do with them is very important. Is that every country has its own rules. There are some broad rules about securities. We get that. But there are some specialties that actually happen. What are the whole periods in different countries? Who can trade with who? There are sanctioned countries, and there are all these lists being maintained, right? So there's a lot of it happening. So that's number two. And the second, all the offerings are not the same. They all have different perks and bonuses and terms with those offerings. All of those things need to be encapsulated in a very efficient way in this wrapper that Elliot was talking about. And that's the only way we can make all this entire ecosystem efficient, right? We can't simply willy-nilly say, oh, there are 6 functions for smart contracts and it's a protocol and let's do it. Hello, there's more to it than that, right? One of the biggest learning lessons that we all should take away is that securities contracts are not the same as cryptocurrency transfers and payments. They're very, very different. If I have a private security, I'm selling that to Elliot through a platform. A sheep farmer sitting in New Zealand has no business trying to validate that. They have no clue what validating a security means from their end, right? This business level validation is one of the most integral parts of smart contracts. And if they are the right wrapper, rightly wrapped around digital securities, that's the only way to go.
That's interesting. That's been my one element you touched in is validation. So you got this great technology. You have this smart contract that we now just discussed, that in order to put a security in it, there isn't one shoe that fits all. That would mean that every single company out there is the same. That doesn't happen. And this has been in kind of the eye opener that people need to realize if you look at all the companies that raise money year in, year out, forget about every company. Let's just look at venture-backed companies. They're all different. The only thing that looks the same, Series A, B, C, D, E, F, G. That's it. Everything else in between, it's like, voila. And so that complexity, you touched on it, Elliot, was really, really important. So we got complexity. Obviously, we know the technology can facilitate that, but the validators, this is an important element in securities law, whatever jurisdiction you go to, is that the validators are the true people that can say, yes, this is the transaction. We indicate and we pass it through. We have Elliot and Karan that want to transact, and the validators are people, the board of directors or the shareholders of the company or somebody assigned. So that's a really important element that I think needs to be captured here, so people have a very good understanding of the impact that it could have on them, is understanding how you're going to utilize this in the marketplace. So obviously the impact for RegA. So let's talk about another component of digital securities that often gets brought out there. Let's demystify, because this, what I'm hoping that comes out of this, people go, wait a minute, I didn't know this. Now here's what this is, here's how it works. Obviously you saw that we never got into the, how much valuation, the value. No, it's all about the specific. But another component that gets brought up in digital securities, because it is a security, it's an asset, there's the word custody and the word transfer agent. And so these are two very distinctive roles and regulated entities that perform these functions. And so I'm going to go to you, Elliot. I hope you know custody and transfer agent. No, I know, I'm just joking. Please, if you can just give everybody an overview, the difference between a custodian and a transfer agent.
So broadly speaking, when you think of both of these, this is from an investor perspective, this is your comfy blanket wrapper. This is your comfy blanket that you go into knowing that your securities are safe, they're secure, they're not going to get hacked. You have access to it, and that it is a place that you can have confidence that is being held in the right ways. Okay, it's important for that because people that don't when you think about, again, going to the equity side, this is, you have custodians that literally their function was to hold your physical stock certificates. That's what the custody business grew up as from a equity perspective. It was literally the place where you sent your physical stock certificates to be stored. They would also help with when you bought or sold these stock certificates, there is a whole process that happens in the back where those physical certificates are actually being transferred between different custodians that one names during the process. Humans have gotten accustomed to the efficiencies of not having to deal with physical stock certificates. The comfy blanket comes off when you move into the digital securities arena, because the function of the custodian and the transfer agent are still, well, you can go back and forth on where you want to custody them, if you want to hold them yourself or not, right? So you ask anytime you're putting in a new process, and this is the digital security side, you have to ask yourself new questions. And the questions here are, why should I pay for a custodian? Can I hold it myself? And these are good questions to ask. We should be asking these questions. From a digital security side, technically you can answer that question yourself. Do I hold it in my own wallet or my own custody vehicle? Or do I hold it in a third party custodian? And then when you think about transfer agents, they're actually required in this process. You can't go anywhere in the issuance of a new security without having a transfer agent in place, right? So the transfer agent required still. Custody, maybe not. And I think when part of the hesitation for investors who have been investing their whole lives to invest into a digital security, the first question we get is, all right, well, how do I hold it? And what is the implications of me owning it in a digital security structure versus a analog paper structure? And that has been a friction point in the process because, again, the awareness and education, we're still out there, but the assumption with new investors that are looking to invest into a digital security offering, the question that they get hung up is, okay, well, I don't want to hold it. I don't want to be responsible for holding it. I was never responsible for holding my equity stock certificates, even though you are, and even though you're paying a significant amount to do that. Nobody really looks at the cost of custody for equities. But in this new digital security form, you have these questions that you need to answer. And the industry needs to do a really, really good job of making it very open, transparent, and easy to understand what the options are and who they should go to for that help.
Okay, I'm just going to add a little bit to that because I think you touched on some really good points there, and the way, like, I'm a bucket guy. I'm all about buckets, so I always go, digital securities is here. It's a way of delivering. I'm going to use the word a way of delivering the ownership. Okay, and I'm going to say based on the regulation, you may be able to deliver that security in this way. So, and so that's one component. The second component is if I'm using that regulation and I'm using an intermediary, how does that affect the way I can deliver that security? And then number three, the regulation that I'm using with the intermediary or no intermediary, the type of investor I'm delivering it to, what does that mean? And this is something people have not realized, that these are all the different components. And to his point, there are times where the word custody is used because the investor, part of their regulation is that they cannot hold the security. A custodian needs to hold the security, and the transfer agent and the custodian work together. When the regulation requires the issuer, the company, to have a transfer agent so it's, I love this. Personally, for me, I think it's exciting because, and no, people's brain like, what the hell is he talking about? Well, Regulation A. Regulation A requires you to file a Form 1A. You don't need to indicate whether it's digital securities or not. We do it every day. So to Elliot's point, it's not a big deal. It's done. We take the smart contract is easy to do because once you get your Form 1 filed and qualified by the SEC, boom, all those rights and everything clears bell right there. But the issue is, under the regulation, the company is required to have a registered transfer agent and to protect the investor at the other end and to have regulatory oversight of the company's cap table real time. But there could be an instance where an investor that comes into this space, who is not just your retail investor, an institution who says, yes, I can invest, like an RIA, which we've not gone through, where they need the custodial impact alongside with the transfer, working side by side. I often hear where you see the word custodian a lot is in the crypto. And sometimes people think that custodian is the same thing for securities, only if you're a certain type of investor and under the regulation. So yes, even investors are regulated how you can hold a security in your, as retail investors. It's no worries, unless you're investing with your IRA and your IRA custodian will get involved, or you're working with a registered investment advisor, RIA, and they will have, are we complicated? No, we're just indicating all the different ways. So you can imagine when you're designing a smart contract or a digital security, all of these things need to be taken into effect, as Elliot indicated, in order to be effective in the marketplace. Otherwise, it won't work, right, Karen? I mean, look, you're knee deep in. So what we did to Karen, you're gonna love this, Elliot. So you know how technology people go, so what is this thing with compliance? I mean, unless they've been. So what we did with Karen, we threw him right in there. We threw him in there with broker dealers, and we threw him in with clients, and to be able to be at all sides of it, to be able to understand that the technology is great to create, but you've got to be living it to understand the errors, to your point, and errors do occur. So I want everybody to have this one thing in their head. What Elliot nailed, I'm not going to forget this. I told you I was going to get back to this. Is that if you get something incorrectly done in a digital, digital security, tokenization, and you get the steps wrong, you're looking at refunding everybody. Yeah. It's a nightmare, right, Karan?
Absolutely. I know you threw me in at the compliance side, but for a number of years, I've been a trader. I used to trade all kinds of instruments and currencies and futures and everything else. And I knew the complexities of that. If you remember, Oscar, when we started building the smart contract for trade, for example, a simple trade with no other complications behind it, we nailed down 25 different validations that need to happen for the trade to be valid and compliant. And one of the big things that I have understood is that validation is such a large word, and you use it, Oscar. There is a technical validation and there is a business level validation. These both need to be done. The technology will handle the technical validations, but to make the business validations efficient, that's where the smart contracts come in. But the fiscally responsible person behind that, the entity behind that, has to be one of the regulated parties. Otherwise, the whole thing doesn't make sense. And now that I got thrown into the compliance side of it, I am seeing this firsthand, day in and day out. The amazing amount of complexities, there's so many exceptions that actually happen. And just thinking about how can all this play correctly? And that's, if we can deal with that, and we are, that's where the power of smart contracts and digital securities will come into play.
So here it comes, 2015,
That's right.
digital securities, tokenization, liquidity, right? That was the big bang, right? Liquidity. I saved the best for last. So I don't use the word liquidity. It's monetization for investors. So it's a way for them to off-ramp their investment. But let's talk about the impact of digital securities to the very last step for the investor journey. So we know there's going to be things here, but obviously people think of every single time you hear digital securities, tokenization, people go, woo, I can trade this liquidity. Elliot.
Yeah, it is and will continue to remain one of the most valuable components to an investor that's going into a private investment, is that you have access to your capital after a certain lockup period, which is 12 months, but you still have access to your capital, which is much better than the current alternative, which is typically 10 years, sometimes even more, into a private investment. The digital security innovation and its ability to transact in a regulated fashion in a orderly marketplace, huge. That innovation is game changing for the private markets, and it may be arguably the most important innovation to private markets, particularly when you think about who has access to invest in private markets. And typically before, 98% of the people did not have an ability to invest into any private investment, because you either had to know the people because they were in your dorm room or they were in your friends and family. If you didn't have anyone within that immediate circle, you weren't getting access to invest into the deals. Or the other way was you were investing into a fund that provided you access. So now we're talking about having access to invest. And the secondary market, fascinating market as it is in 2021. There's a couple of unfortunate things that were not ready yet. The first is we don't have enough names. We don't have enough good quality names and examples for investors to go and invest time into understanding, hey, what is out there in the Reg A space? What is something that I believe in, or I believe in their mission, I align with their values, I believe their vision, whatever that is. We need more examples. So we're working on that. The industry is working on that. The second is having the understanding of how the actual markets function, which we're still working on that as well. Yes, we have an ability to trade, but generally speaking, you should also know what it's like to, on the other side, when you want to buy in, what are some of the restrictions? This is a new asset class. We had mentioned earlier, the other very fascinating thing is that every digital security is likely different, right? It's not like equities, where an equity is an equity and it's an equity, generally speaking. And the only thing is like, oh, I get a dividend or not. Digital securities have a lot of different benefits that you could do. They have a lot of different functionality, triggers that you can build in to how the security operates, that is complex for investors that are coming in. So there's a lot of other different considerations that have to happen for a digital security in the private markets. But we are just coming to the cusp of now being able to provide that marketplace in an orderly way so that investors can access their money. Now, the biggest difference, we're not using liquidity. We're saying off-ramp. We're saying access to your capital. That may or may not come at a price, and it may not come at a price that you think is fair or not. The innovation today isn't a liquid market or a price at which I would expect to be able to sell my position at a reasonable number. So we just need to make sure that we're very clear that we're bifurcating those two. It's not liquid. I don't know. I think the whole industry is hoping, when can we start saying something like that term? But generally speaking, we're not using that off-ramp, access to your capital. And that step alone is massive and major and will have great benefits to the investor.
Well, actually, it's not even the industry itself, it's the SEC. In fact, when a company files a Form 1A for the Reg A offering, I've seen this where companies go, but there's a secondary market. I can offer them liquidity. The SEC will not allow you to say that because that's not what you're offering them. You're offering them an off-ramp where there's a venue, a registered venue, a FINRA broker-dealer with an ATS license, specifically to allow you to monetize that investment. And so it is part of an education element that we are bringing out, just as a sneak peek for everyone. Because of this great discussion of secondary market, we're having a half-day summit coming up, specifically all around demystifying secondary market, because to Elliot's point, I think the term liquidity has been terribly misused. Tokenization really took it out of context. You can take a security anywhere. You can't. If that was the case, then why do we have securities regulators? That wasn't going to go away. Can we make it smoother, less friction? The answer is yes. Can we make it that an investor who invests $100 in a company and to be able to trade, to be able to place their securities on a secondary market and be able to have others look at it and do it in a cost-effective manner for everyone involved, issuer, broker-dealer, transfer agent, ATS? And the answer is yes. So watch out, there's an announcement coming. So the point is Elliot.
And just to add to that, Oscar,
that doesn't mean there's liquidity. I didn't say there's liquidity. I just said the venue is there, and that's all. And it will take time for that venue to build. Please.
And along those lines, the word digital security, the word in there, the security, I think is important because a lot of our peers in the more crypto market spaces, hey, we need less regulation. We needed an environment where we're not centralized. Unfortunately, humanity hasn't done a very good job of proving that it can't operate within a rule set. And I think when we saw what happened with ICOs or tokenizations or utility tokens in 2017 and 2018, really showed the use case of what something digitally can do, right? We saw a lot of liquidity, I'll use that term, to describe ICOs, because there was a lot of transacting going around. So when you look at, okay, what could this look like? It could look like a quote unquote liquid market that we saw during ICOs. Now, the problem is 75 to 85% of that was just bad behavior, right? So I would never, that's why we don't use the word tokenization anymore, or ICOs or utility tokens. I probably haven't said those in like a couple of weeks, right? But
you mean 90%? I just want to correct you. It's over 90%.
Yeah. Over 90%. Yeah, maybe even 95. We could even jam that up higher, right? But the point is that one, we can see what a more active market could look like if more people were transacting in the digital securities world, but it must be done in a regulatory compliant way. And I appreciate Kiran's comment about the global nature of this. Just think today, it is very difficult, for example, to go buy an equity in India or in China or in South Africa. These are very difficult markets to access, especially if you're in the US. When we talk about kind of digital securities, all of a sudden we're opening up these global access, and there are a significant amount of global industry securities regulations that have to come into play. There's a significant amount in the US when you talk about blue sky laws and all the craziness around that, which I know you guys know very well. So it takes time to be able to build the compliant chassis that is able to allow the industry to one day operate in a much higher volume type of environment. But if we don't have that structure, we're going to go down a path. We already saw what that path looks like, and we can't do that again. And that's not do it again, primarily for the investors, because it was a lot of issue or bad behavior that happened. So this is all going in for investors, and sometimes it's hard to describe that the processes that are in place here and that are being built are to protect them when they're like, I just want to buy it. I just want to own it. So yeah, we're in that kind of give take. It's still building the infrastructure, the global compliance engine and chassis, yet still, hey, we need people to come in because we need more names here in order to facilitate more transactions.
Good point. Good point. And I mean, it is coming together, which is good. I mean, the element of there, I mean, obviously everybody gets attracted to digital or tokenization immediately because of that term liquidity. So hopefully for those who are listening in today, you'll find it, the regulators won't allow you to use it. And if they catch you doing it in your presentations, make no mistake, they are listening, because an investor will take liquidity very much like what happens at an exchange. And it's really important that you see what the industry is doing to protect you, to make sure that it's done right. And there are other elements. But the good thing is a lot of great companies are working together to solve that problem, to bring that to fruition. And I think, and just this is us, I mean, we have created a charter for digital securities for the market because we believe in certain things. To your point, everything you've said, Elliot, is funny. We wrote it. It's now been 5 years ago. We wrote it as a charter. People laughed at it and they go, no, you're just part of the old system. I go, no. It's about making the old system work with the current and watch. It's amazing. There are people open-minded and it will be better. To your point, it's not about, removing intermediaries or forcing intermediaries in. It's to make the process more efficient, frictionless. So if we can keep that in mind, it's amazing, but you have to understand the entire journey, and you can't convolute it with, I'm a company, I'm raising capital, and boom, 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 I'm over here. There's so many little things along the way that need to be part of it. And so today's discussion was really to unravel which it happened. And because I had two ideas today. Honestly, I had two ideas. It was either just dig in whether, is RegA, are we seeing digitization or tokenization? So of the 2,000 or so filings, there's only been two. So there it is, two. There is a third one for a stable coin, which is us. We don't classify that under digital securities, but it is a different form. But the point is, that's it. The rest of the people, as Elliot said, it's about adoption. The investors are scared. They're jittery. They don't want to hear that word tokenization or digital assets, still we owe it to them after what happened previously. But this education is a key element, educating the market on how it works, what you need in order to do an offering on RegA. Doesn't We didn't say you don't need your lawyers, your auditors, broker dealer, escrow provider, all the regulated elements, none of it. It's all part of it. That's not going to change anytime soon in order for you to facilitate your digital securities offering for Regulation A. And but it is exciting. So obviously, I'm going to give back to both of you. I mean, I'm going to say first, I'm very bullish on what's about to occur with Reg A, because there's the attraction now is that with 75 million, we're attracting a very different type of issuer, a real estate issuer. And if any of you are following the news any other given day, every single person is trying to launch a platform for real estate tokenization, because fractionalization is the big conversation piece. So I'm going to demystify that right away. Fractionalization has always been around. It's never been the issue, and I'm sure you'll say the same, Elliot. Never been the issue. The issue is, could you administer it in a more cost-effective way? Elliot said it, a more effective, cost-effective way to go through the processes. So that's been the real key. So I believe that that's going to have having digital securities in real estate and other forms, in particular when they want to fractionalize even further, it's going to be fairly impactful. But it won't be sold that way. I just want to be very clear. That is not how it's going to get sold. I'm just saying how it's going to be managed. See, I'm not a believer today, to Elliot's point, that if you hang up a banner and you say, I'm selling digital securities, that they will come. That's me. Elliot.
Yeah, I would love to be able to say that. I think anyone in digital securities today, not just Reg A plus, just generally speaking, even some of the other regs, we're not where we would like to be. And that's a big question for the industry, is when is that going to come? I'm not sure, right? I don't think anybody knows in the industry. I will say that with what's happening with kind of Bitcoin broadly, it is bringing a brand new type of person to the table. And I think as it relates to digital securities, I think we say this, that career risk is starting to flip, right? So when we jumped into this space, people were saying, well, what is going on? Why would you do this? I think we're coming to a moment where now it's, well, how come the career risk is on someone who's not considering what these types of innovations and the infrastructure that's being built today is happening, and how that they can start planning. You don't have to necessarily get involved, but start planning or considering what this new innovative infrastructure is going to look like and how it's going to provide value to investors and issuers. And then one final thought, all it's going to take is one very high profile person that people follow everywhere to come in and saying, I'm going to raise in a Reg A plus in a digital security structure for my new initiative. And you're going to have a stampede in, right? And so we're patiently waiting for that. The patient part is tough in 2021. For those that are big believers in this, I don't know if that happens in 2022, 2025 or whatnot, but it will come at some point, and we're ready. And the last thing I'll say is everybody in this industry, which I appreciate, is very approachable. So please reach out, say hi if you have questions. It is something that we all want the industry to succeed in the right way.
Yeah, no, I agree. Karan, your words.
So I'll just give you my very quick technologist wind up, so to speak. I'm sure there are many automobile engineers that love to build wonderful cars that do nothing but sit there in the showroom. They can't drive them anywhere, right? Now we are seeing this evolution of investors who are real investors with real money and now asking the questions, why doesn't the car drive? Can we do that? From a technologist, I'm the kind of guy who actually likes to build cars that people drive, right? Very effectively and safely. So I'm looking towards all these wonderful challenges about how we can create smart contracts, digital securities, all these safety provisions using blockchain, permission blockchain technologies. So anyone has, would love to chat more about that, we are all very approachable. Would definitely more than welcome those kinds of conversations. But I'm like super excited about it.
Yeah, it is pretty exciting to see where we're heading with this. And there's going to be, on to Elliot's point, high profile individual. Will that be, and it's got to be the right one, because we saw this in cannabis. So I'm sorry, why am I bringing cannabis? Because cannabis was the same way. It wanted a high profile individual to bring the cloud and the investors in, and it did, but nobody was watching how it was being properly done. So I want to just echo your words with the following: the right individual that has a lot of clout, that can bring and draw people in, but with all the necessary items, regulatory items, intermediaries, to ensure that there is no slip up for this thing to be refunded. Because in the cannabis sector, it went the other way. It was pow wow, all the smoke up in the air, and then give all the money back to the investors. Because again, it's one thing having one part. I just want to make sure we're clear, all the part. But this does not mean that your company cannot go out there. I mean, we have clients at CoreConnex that every day do Reg A's, and they don't need to sell it as a digital securities, but how it's getting stored for the efficiency, it is a digital security. That's the ironic to all this for us, is that it's not a big deal anymore. It's a everyday life. We do it for efficiencies. Again, I'm going to keep quoting Elliot on this because they're important, to make it more efficient for the processes that we have internally, reducing our costs. See, by doing that, it reduces our costs, reduces your costs, so it becomes a win-win. So this is only the beginning of a phenomenal discussion. I kid you not. This digital securities is just, as Elliot indicated, and Karan, we're just getting started. A lot of players are going to get involved. There's a lot of different components, but try to remember what I said earlier. You have to, when you're looking at this, you have to look at all the elements, the regulation that you're about to use, the intermediaries the investors you're going to target. That's going to make a lot of different decisions for you on how you need to package all this correctly. Anybody tells you that you don't need to worry about that, run. Till then, as I said before, you can reach any of our speakers, our panelists at KoreSummit.io, or you can see our YouTube live channel, CoreConnex. We want to thank you for a wonderful, wonderful afternoon spending with us today, talking about digital securities tokenization for Regulation A. Stay tuned, because we have a lot of great topics coming in the month of March. Elliot, thank you. Karan.